週末は長席でナビもせず寝ているお前窓の外は見たこともない中道迷うのも旅だって君の口癖その適当さに僕の肩の力が抜ける計画通りにいかないそれこそが醍醐味ハプニングを笑い話に変える魔法途中で見つけた夢の展望台そこで見た夕日一生忘れないだろうや道なき道進むワクワク隣に
Back to studying again. Last time I put like my Gemini chat in the stream. No, I'm not gonna do it because I feel like it distract me, ganggu banget lah buat study. Jadi I'm gonna stuck with my second laptop as everything. This is just like the stream, so it's just my face and the timer. That's it, and the music as well. So yeah. Okay. We're gonna learn about financial reporting quality, and this is what I'm gonna guess. What the material I'm gonna guess is gonna be about the quality of the financial report. What I mean, like quality of financial report, it means in CFA program we learn two types of standard for financial report, that is IFRS International Standard and US GAAP. I don't remember what's the full name of those two. They have different standard in general. US GAAP is more conservative than IFRS is more flexible. For like example, in like research and development is much more flexible, and like sometimes it kind of inflates the earnings for the financial statement, or in the income statement, the balance sheet. Sometimes it kind of inflates those. But yeah, let's go. Let's start with. I was kind of broken, but well, let's go. Comparing financial report quality with the quality of reported result. Financial reporting quality refers to the characteristic of a financial statement. The primary criteria is adherence to generally accepted accounting principle in the jurisdiction in which the firm operates. Compliance with GAAP itself does not necessarily result in the highest quality of financial reporting due to choice method, estimates, etc. High quality financial reporting must be decision useful. Two characteristics of decision useful financial reporting are relevance and faithful representation. Relevant, useful in decision making and material. Faithful representation, complete, neutral, and absence of error. The quality of earning can be judged based on sustainability of earning, proportion of reported earning that can be expected to continue in the future, as well as on their level. Must be high enough to sustain company operation and existence over time, as well as to provide an adequate return to investor. Spectrum for assessing financial reporting quality. Quality levels of financial reporting from best to worst. This is from best to worst. Reporting is compliant with the GAAP and decision useful. Earnings are sustainable and adequate. Reporting is compliant with GAAP and decision is useful. Earning quality is low. Reporting with compliance with GAAP but earnings quality is low, and reporting choice and estimate are biased. Reporting is compliant with the GAAP but the amount of earning is actively managed. Reporting is not compliant with the GAAP, although the numbers presented are based on the actual economic activities. Reporting is not compliant with the GAAP and includes fictitious numbers and fraudulent. Difference between conservative and aggressive accounting. Interesting. Increase in earning, financial position, decrease in earning, and financial position. So number one, bias and method, aggressive and conservative. So in aggressive, you capitalizing current period costs. Okay. Expensive current period costs. Longer estimate of the lives of the depreciable asset, because the longer depreciation, the more spread out it is. So the costs get lower and the minute earning is higher. Shorter estimate of the life of depreciable asset. Higher estimates of salvageable value. Lower estimate of I don't know what salvage value is. Straight line depreciation, accelerated depreciation. Yeah, because like, okay. Delayed recognition of impairments, early recognition of impairments. Okay. Less accrual of reserve for bad debt. Less accrual of reserve for bad debt. More accrual of reserve for bad debt. Smaller valuation allowance on deferred tax asset. Larger valuation allowances for deferred tax asset. Okay. Let's look at it. Slide 4. I don't understand 2 point. Aggressive target.
た席いつも会う老人が振りに釈した名前も知らないただな隣人でもそこにある気配に救われている世界は冷たくて無関心に言えるけど実は細い糸で網明かり、世界とつながっている確かな予感一人きりじゃないと風が教えてくれる偶然が織りなすこの美しい模様人間関係の楽しさが孤独を溶かしていく雨の日の駅傘を貸してくれた人来も言えぬまま人混みに消えたその小さな勇気が連鎖していく、次は僕が誰かに手を差し出す番社会という名の巨大なオーケストラ僕の音色が誰かの響きと重なるそれはかすかでも確実なハーモニーよくさ一人が楽だなんて言うけど結局僕らが今日笑えたのは誰かが
Okay, accrual of reserve. In accounting, a reserve, specifically the allowance for doubtful account is an estimate of how much money you think your customer will not pay you back. Even if you haven't lost the money yet, GAAP requires you to record the expense now if you expect a loss in the future. The aggressive choice management set a small reserve. They act optimistic, saying almost everyone will pay us. This results in a lower expense on the income statement. I'm guessing like account receivable is gonna be lower. And the conservative choice, management sets a large reserve. They act pessimistic, recording a big expense today. This lower the net income now, but it can act as a cookie jar if the customer actually do pay later. Management can release the reserve to boost future profit. For reserve accrual, is it on the account receivable in the AR, I'm pretty sure, in the income statement yang karena kita nge-estimate apakah bakal membayar atau tidak. Next, valuation allowances on the deferred tax asset. As we discussed, the distribution material, a deferred tax DTA. Like a tax coupon you can use to pay less tax in the future. However, a coupon is only useful if you actually have enough future profit to use it against. A valuation allowance is a contra account that boosts the value of a DTA if it's more likely than not that the company won't be profitable enough to use it. The aggressive choice management uses small valuation of allowances. They are essentially saying we are 100% sure we will be highly profitable in the future, so these tax coupon are worth the full price. And what for the DTA point, what happened if the company is not profitable? Does that mean the company is gonna be late Okay. Stuff like the conservative choice management uses a large valuation allowances. They are saying we might not make enough money to use these coupons, so let's mark them as dumb to be safe. This result in higher tax expenses today and a lower net income. I don't get this. I still don't get like what I'm saying. DTA started. I mean, I get it, like a DTA lower, that means your tax expense is gonna go higher. Because tax expense goes higher, that means your net income is gonna go lower. Like it lowers your revenue. This way analysis cap. Management can use these accounts. Topic. Realizability. I'm guessing not realize. Okay. If a company is not profitable, does not necessarily mean that it will be late at paying for warranties or other bills. Accounting is about timing, while paying bill is about cash. However, it has a massive impact of DTA. The coupon logic, remember that DTA is like a tax coupon for the future. Yeah, basically lu nggak bayar the full tax today, but you will pay it in the future. Like, I think siang tadi gue belajar kayak misalnya harus bayar I don't know some kind of detail lah, tapi 10.000 tapi malah bayar 8.000 doang, tapi bakal ya okay. Remember that a DTA is like a tax coupon. Kamu lihat lah, give me an example of company using DTA. I need examples. Base, okay. Example corporation, the warranty DTA. In this scenario, Firebird uses DTA to track prepaid tax because it's warranty program. Firebird estimate that 5% of its sales will eventually need repair. So accounting in the income statement in year 1, they record $5,000 warranty provision as an expense to match their sales. This lower their reported accounting profit. The government only allows a deduction when the company actually spends cash to fix a product. In year 1, they only spent $2,000. The DTA creation, because they recognize 5,000 expenses for shareholder, but only 2,000 deduction for the tax office. They have 3 2. So, okay. This example is for example, involves tax loss carry forward and management action. WCCO has accumulated 355 million in DTAs. This comes from employees' benefit, pension, and retirement promised made to workers, international tax loss carry forward, past losses in a foreign country that they can use to offset future profit, the valuation allowances adjustment. In 20x5, WCCO's management decided they were more likely to be profitable than they previously thought. I cannot speak that word. The result, they decreased their valuation allowance by 33 million. This unlocked more of their DTA, which reduced their tax expenses. Oh my god. Let's look at a company like Firebird Corporation from the slide and following their warranty DTA until it's fully used. Year 1, Firebird sells product and estimate $5,000 in future warranty repairs. Accounting reality, they record $5,000 expenses now. They make their profit look smaller to shareholder. Tax reality, the government says no deduction yet. You can only deduct it when you actually spend the cash. The result, Firebird pays tax on that $5,000 in that $5K of profit today. This creates DTA. Assuming 30% in taxes, Firebird pays tax on that $5,000 of profit today. This creates DTA. 9,000, assuming a 30% tax rate, and they have prepaid 9,900 in taxes. Steps 2, the usages. This is year 1, which they sell the product, and year 5, I'm guessing, has stopped selling the product, but the customer brings one back for repair. Firebird spent $3,000 in cash to fix it. In the income statement, the expense was already recorded in year 1, so the profit statement shows $0. Tax return. The government finally says, okay, you spent the cash. You can now deduct $3,000 from your taxable income. The result, because of that deduction, Firebird actual tax bill is $900 lower than what their profit what their profit statement suggests. They just use their coupon. Fully paid financial receipt. Once every single product has been repaired or warranty period end, the warranty liability and the balance sheet hits 0 at the exact moment. The DTA also hits 0. The company has officially received fraud. Ya, tapi ya nama juga apa namanya? Oke, kita ngeprediksi usage gimana. Sebenarnya kita lebih ke usahanya. Okay. Sometimes GAAP can introduce conservatism by imposing a higher standard of verification for revenue and profit than for expenses and accrual of liability. For example, research costs are expense when incurred due to uncertainty future benefit, while associated revenue is not recognized until some future period. Accrual for legal liabilities are recorded when future payments become probable, while the standard for recognition increase accrued asset value is stricter. Under US GAAP, write-down of inventory values are required when their value is likely impaired. Write-downs of inventory, but increase in inventory value may not be recorded until the inventory is actually sold. Okay. Motivation that might cause management to issue financial reports that are not high quality. Manager may be motivated to report earnings that are greater than, because earning guidance offered early leverage and unprofitable. Aggressive accounting may be motivated by desire to avoid violating debt covenants. 3 factors that typically exist in cases where management provide low-quality financial reportings are motivation, opportunity, and a rationalization of the behavior. Circumstances in which low-quality or even fraudulent financial reporting is more probable are: the company has weak internal control, the board of directors provide inadequate oversight, applicable accounting standards provide a large range of acceptable accounting treatment, provide for inconsequential penalties in the case of accounting fraud, or both. Mechanism that discipline financial reporting quality and potential limitation. Securities regulation typically require a registration process for the issues of new publicly traded securities, a specific disclosure and reporting requirement, including periodic financial statement and company notes, an independent audit of financial reports, a statement of financial condition or management commentary made by management, a signed statement by the person responsible for the preparation of a review of process. Enforcement by actual security guards may be include fines, suspension, and prosecution in issues anti-securities, and public disclosure of the results from the clean, whether responsibility does not work was good, but only for reservoir assure that its mentioned report K has been fairly reported. Okay. Boy, this is just stacks. Okay. Accounting method choices and estimate that could be used to manage earning, cash flow, and balance sheet items. Revenue recognition. A firm may choose the term with the customer from Okay, bro.
Dirty heart clean, keep it real 10代の情熱今はどう感じるガラスの中響くインパクトの音意味のない議論朝までの逃避行 No money, but we had everything ガソリンの匂い風切るエナジー忘れないぜあの無垢な好奇心今も俺のエンジン回す努力源噛み合わない歯車がなぜか愛しくて笑いのツボだけは同期していた
Hujan. Okay.
静かなデスクの上あの頃の騒がしさがふとと恋しくなる今日求めて見失う余白お前の無駄話が実は一番のスパイスだったたまには汚れて笑い合いたいよな綺麗なだけの毎日じゃ退屈すぎるから積み上げた時間は嘘をつかないたとえ道が分かれても猫はつながっている誰かと作る新しい景色の輝き不完全なパーツが組み合わさる奇跡一人じゃ作れないメロディーがある人間関係の楽しさが日常を加速させる
Am I retarded? Oh my god. Oh god. I'm sorry. Oh, the photo. Okay. Ah, yeah. This is FOB, that is channel stuffing, bill transaction, and shipment timing. Okay, summarize how impact anchor. Okay. FOB shipping point recognized at dock, early recognition channel stuffing, overloads distribution, bill now, ship later, boost current profit, or for future. I see. Here's the no-brainer. Okay, this is all about when the legal title of the goods pass to the buyer. FOB shipping points revenue is recognized the moment the box leaves the company loading dock. Oh yeah, I feel like I've heard of this before in my accounting class. FOB destination revenue is only recognized once the box physically arrives at the customer dock. Channel stuffing. Think of this as like clogging the pipes. Management sends way more product to its distribution retail than they could possibly sell in a normal period. It artificially inflates current management sends way more product to its distributor than they could possibly sell in a period. Okay, let's take a break. I don't usually look at my phone, but I need to look at my stocks, my trading stocks. Masih buka kan? Ya masih buka. Pada bed good for bed. This is oh shit. What happened to Kenapa ada terus? Salah. Now you can see my neck more. I did cut my, I did trim my beard. Yeah. Fuck it, stick so long. Okay, yeah. Okay, free on board shipping I think kayak depends on kayak keluar atau masuk. Kalau agresif, shipping on point, saat berangkat, destination saat baru nyampe. And then channel stuffing, think of it as like clogging the pipes. Management sends way more product to its distributor / retailer than they could possibly sell in normal period. The goal is to artificially inflate current sales number to meet earning target or analyst expectation. Bill and hold transaction. Customer buys the items and receive an invoice, then asks the company to keep the product in the warehouse for a while. The manipulation. Fictitious. Bill and hold transaction let company record a sale and profit for items that are actually still sitting in their inventory. Because this product future, the revenue will be shipment timing. This is the manual override for revenue. There is accelerating shipment, rushing out deliveries at the very end of a quarter to pump up that quarter revenue, delaying shipment. If a company has already hit its target, they might hold back shipment until the next quarter to save. Okay, crazy. I mean, I kind of understand. Yeah. But like, it's almost impossible to, I think, to yeah. But I feel like if we use like a curl-based method, like the shipment timing is gonna be like worst problem than the curl method of accounting. If we use cash-based accounting, do you think the problem with ship is getting worse? Actually, switching to cash-based accounting would likely make the shipment problem disappear, but it will create brand new problem that is as bad. Cash collection manipulation. The shipment is the trigger for revenue. Under a cash-based accounting, the check is the trigger. Okay, that's it. Okay. I think you can hear the lightning, right?
ジしてまた戦場へ戻ってくんだ Amber liquid deep talk classy night お前との絆最高の light Just reflect to it the soul base moves the heart 二人の物語 never apart Years pass by we grew up wise お前の瞳に映る俺の rise old fashioned way keeping it true 感謝してるぜ my friend to you 変わらないもの変わりゆくもの全てを受け入れて乾杯しよう長く続く関係の心地よ for me 一人で磨くより輝く魂時間をかけて気づいたこのシーンで人間関係の楽しさが夜を贅沢にする最後の一杯をゆっくり味わおうお前の正論僕のわがままぶつかり合って火花が散る午後分かり合えないと背を向けたけど心のどこかでお前の声を待ってる違いがあるからこそ惹かれ合う磁石のように反発しては引き寄せてパズルのピース形は違うけど隣れば一つの絵が見えてくる摩擦が生む僕らの熱量痛みの数だけ深く刻まりぶつかり合う不器用な愛の形一人じゃ知れない自分の限界葛藤の先に見つける真実人間関係の楽しさが心を磨いてく
Bill and Holt Bill and Holt yang mana? Bill and Holt Bill Nourship Label oh ya ada fucking ya apa sih basically sales udah naik tapi masih di inventory item ya. 違うからこそ僕は僕を君をもっと知りたくなるんだ Cloudy vibes puzzling complete 君との関係最高のフィット不規則なシェイプ重なるフェイト愛と憎しみ神意とイノステイト Fighting for truth growing up fast この絆を永遠にラス違いを楽しもうありのまま二人のストーリードラマチックなまま壁を壊して向き合う勇気その先にしかない光があるぶつかり合う There's so many guys that kecil gitu like karena ngasih kamu ini The fourth quarter earning shows apparently either high or low compared to the seasonality. Oh, jadi misalnya kan kayak misalnya di some industry di akhir quarter turun banget. Tapi this company in the last quarter is actually been really good, right? But now like you have to look at that why, you know? Okay, the phone was certain expenses are classified as non-recurring and repair regular in the future. Gross or operating profit margin are noticeably higher than are typically for the industry and peer companies. Management typically provide only minimal financial reporting information and disclosure. Management typically emphasizes non-GAAP information. Growth by purchasing a large number of business can provide many opportunities to manipulate. Okay, I've read all the material. Now, let's see the question. That was the fastest one. Only like 35 minutes of reading, so it's not bad. Okay, from that PowerPoint, we can see the question. Yeah. Okay. According to the spectrum for accessing financial reporting quality, which of the following scenario represent the highest quality? Okay. It's B. Management of manufacturing firm decide to increase the estimated salvage value of its depreciable machinery. This accounting choice best described as increase the company bad debt reserve, minimize current period income taxes. Definitely not. Avoid violating the debt covenants. Increase the company bad debt reserve. I'm guessing 3A, but I don't understand. An analyst notes that the company has received an unqualified clean audit opinion. How should the analyst best interpret this opinion regarding the possible of fraud? It indicates that the board director has an adequate audit. It offers a reasonable assurance that the client has an unqualified claim. When a US company reports non-GAAP earnings measured in its financial statement, it is required by regulator to display the non-GAAP measure with greater prominence than the comparable. Let's see. Technology retailer recently billed several customers for servers and sent out invoices, but the customer requests that the firm keep the servers at the retail warehouse for a month. If the retail is the bill date transaction, during a year record high profitability, a firm management decided to significantly increase its allowances for uncollectible accounts that is beyond its historical average, despite no change in customer credit quality, which will most likely be. Okay, I blank out for a second. During a year of record high profitability, a firm management decided to significantly increase its allowance to uncollectible account that reserve beyond its historical average. Despite no changes because of credit quality management, most likely motivation is to smooth earnings by sorry. HB. Okay. During a period of steady rising prices, a firm use of FIFO inventory costing method compared to what will most likely higher gross margin and earning. Ingat first in first out, berarti yang pertama masuk, yang pertama yang keluar. Berarti yang paling, misalnya di Februari kita minta di Maret, jadi di Februari yang itemnya biasanya lebih murah, misalnya dari Februari $2, di Maret $3, there is an increase, right? Tapi yang baru dibelikan di Februari, maka it will increase earning, and it will decrease cost of goods sold. Karena decrease cost of goods sold bakal increase gross margin and earnings. So it's a company decides to delay paying its supplier until the first week of subsequent accounting period. A company decides to delay paying its supplier until the first week of subsequent accounting period. Then, rather than paying them before the current period ends, this action will most likely have effect. Will increase cash flow from operation, decrease cash flow from, I think is more correct, karena lu nggak beli, lu nggak delay pay, ya? I mean, kayak transfer of cash is gonna be transferred in the next quarter earnings, or like a financial reporting schedule date, like that. Makanya cash flow-nya bakal lebih banyak karena pengeluaran, transferring of cash hasn't been done in this period. So, an analyst is reviewing a company financial statement and notices a declining inventory turnover ratio combined with a sudden drawdown of historical inventory levels. If the firm uses LIFO inventory costing method, this drawdown will most likely is B. Okay. 1 is B, correct. 2 is B. 3 is A. 4 is C. 5 is wrong. Okay. 6 is B. 7 B. 8 C. 9 A. And 10 B. I got 9 out of 10 correct. Okay. Let's see. What's the question number 5? When US company reports a non-GAAP earnings measure in its financial statement, it is required regulator to answer C. Display the non-GAAP, reconcile the difference between the GAAP measure and the most comparable GAAP measure. What? I don't understand that. I need to read the financial statement. Okay, that's it for bab 6. Baru 2 bab lagi, 7A dan 7B. So I'm gonna take a long break. I'm gonna reset my brain because it's gonna be new material, so I have to restart my brain karena brain sekarang lagi mikir tentang accounting, tentang the quality of financial statements. So I'm gonna take a long break. I need to go to the toilet, so yeah.
挑戦をパレードに変えよう。仲間がいれば道は開ける。世界中に僕らの声を響かせよう。僕らはここにいると、oh yeah.
Shout it out, let the world hear 君の挑戦俺は no fear backing you up like a solid rock 限界の扉二人で knock believe in yourself like I believe in you 最高の未来つかも the true 絆は武器愛は防具二人のストーリー最高の Vogue
一人じゃないから強くなれる。信じ合う心が奇跡を起こす。誰かを応援するその熱量一人でも得るより明るい未来支え合うことで超えていける壁人間関係の楽しさが勇気をくれる。君の健や一番に湧いたタラララタタタラララタタタラララタタタラララタタバラバラだった記憶の団結今一つの大きな絵になる。出会いと別れ喜びと痛みこれまでの全てが愛しいモザイク。一人で生きてきたつもりだったけど振り返れば無数の手が添えられていた。あの時笑い合った誰かの横顔あの時叱ってくれた誰かの言葉その一つ一つが今の僕を形作っている大切なパーツなんだ。不完全な僕らが織りなす模様遠くから見ればこんなに美しい。人間関係の楽しさが描いた奇跡一人じゃ完成しなかったこの人生つながることで僕は永遠になれる。モザイクの輝きが未来を照らす。明日出会う誰かもきっと新しい色僕の世界をもっと鮮やかにしてくれる。恐れずに心を開いていこう。人間という最高に面白い旅一人の夜 PC の前で思う生きててよかって心からそれは君がお前があいつがそこにいたから。
Yeah, 結局人生って誰と出会ってどう笑ったかただそれだけのことなのかもしれない。傷つくこともあるし面倒なこともある。でもそれ以上に誰かと心が通じ合った瞬間のあの震えるような喜びそれがあるから僕らはまた新しい誰かを求めて歩き出す。僕の人生というモザイクに色を添えてくれた全ての人へありがとう。これからもよろしくね。Yeah, full circle, mosaic complete 君との絆最高の great fragments of time forming a soul 愛の力で目指す final goal No more solo We are a team 二人の現実超える dream Life is a canvas Let's keep it bright ありがとう全てのつながりに light
描き続けよう終わりのない物語世界という名の巨大なモザイクを
I'm sorry if you have to hear that. I'm so sorry. Yeah, okay. I'm so sorry you hear that. I bring my earphone to the fucking toilet. My bad.
右耳に前左耳に僕混ざり合う二つのバックグラウンドお前が教えた古いソウルミュージック僕が進めた新しいエレクトロ全然合わない好みが逆に刺激これやばくないって目が輝く自分一人の世界じゃ出会えなかったから白を君が筆に乗せてくれた僕のモノクロな思考がグラデーション鮮やかに変わる驚きと発見の連続 Playlist shared Horizons expanded 君のセンスそれの脳にランデル DPM シンプロ
Okay, what's wrong with Twitch?
信頼音楽の好みで暴く正体 No skip needed every track is gold 二人の物語
Okay, hear me from?
音の数だけ増えていく共通言語
Oh yeah, definitely can hear me.
深く入り込むメロディ
Okay, that's my man.
新しい扉を開く君の手のぬくもり知らない自分に出会うその瞬間の喜び一人じゃたどり着けない高い場所がある
This is actually crazy. Like all this is AI.
視界を広げていく趣味が合うことだけが正解じゃない違いを楽しむその余裕が愛おしい、お前の嫌いなものが僕の宝物理解できない面白がる贅沢そうやって少しずつ世界を許していく僕らの境界線音楽が溶かしていく妖怪を超えた先に待っていたのは見たこともない輝くエモーショナル不協和音さえスパイスに変えて奏で続けよう僕らのアンサンブル新しい扉を開け君の手のぬくもり知らない自分に出会うその瞬間の喜び一人じゃたどり着け
Oh, I just love this song, I know.
ない場所がある人間
I just love this song. Give me a second. I need to research buffet. Oh, owner's earning. It's not earning. Yeah. Fuck. Bro, what the fuck is this? Kan depreciation capex and it is like bukannya enggak, it's more like a free cash flow to equity. Okay. Okay, let's go. Next slide. It's gonna be about financial analysis and technique. So we're gonna analyze financial statement. After all of that, we're gonna learn to analyze the financial statement. It is cool, right? So the first thing is something called ratio analysis. I've heard of this, which is use ratio to analyze the business. Well, we do peer-to-peer, and we also do we do peer-to-peer usually. Limitation of financial ratio. Financial ratios are not useful when viewed in isolation. They are only informative when compared to those other firm or the company's historical performances. Comparison with other companies are made more difficult by different accounting treatment. This is particularly important when comparing US firm to non-US firm. Yeah, so like different financial statement standards are going to be hard to analyze. It is difficult to find comparable industry ratio when analyzing companies that operate in multiple industries. Conclusion cannot be made by calculating a single ratio. All ratio must be viewed relative to one another. Determining, I don't know how to say that. The target or comparison value for ratios requires some range of acceptable value. Future earning, cash flow, average for flexibility, assess performance, evaluating changes for comparison analysis. Common size, vertical, horizontal, comparison, graphical analysis, like column chart. Regression analysis often used for forecasting. Liquidity, interpret activity, liquidity, and solvency and profitability. So that's what activities. This category includes several ratios, also referred to as asset utilization or turnover ratio. They often give an indication of how well a firm uses various assets, such as inventory and fixed asset. Liquidity ratio. Liquidity here refers to ability to pay short-term obligation as they come due. Solvency ratio gives the analysis for one of the firm financial leverage for ability to meet longer-term obligation. Profitability ratio provide information on how well the company operating profit and net profit from its sales. Activity ratio, cost of goods sold by average inventory, makes sense. Average inventory period. Inventory turnover. I think I'm gonna write this word some activity ratio. There's something called inventory turnover. which is cost of goods sold divided by average inventory. It depends on it's probably gonna be like a rolling average inventory, or like a couple probably I don't know. It depends on that is the secret sauce. Next is the average inventory period. This is 365 divided by inventory term over. Okay, I want to learn this. So we learn about inventory turnover, which is from the above, and with the average inventory turnover. Oh, this is annual, right? This is annual. Like, what is the turnover for couple period? Annual sales divided by average receivable. Okay, receivable. Annual sales. I'm gonna say it's like how fast this is. The receivable is like how fast the fucking company, how fast the company like sells is inventory. I'm pretty sure that's the average. That's receivable turnover. There is average collection period. Collection period. 365 right? Receivable turnover. Okay. Look at that slide, look at that PowerPoint, and specific this slide 6. It mentions receivable turnover. Receivable turnover is I let AI deal with math, so I don't have to. Depends on what level of math you are working on. I think like undergrad math, high school, you just use AI. If you, like they give great answer. By the way, I'm learning about accounting, so not math. I guess I'm learning math. I'm learning like financial ratios and stuff. Inventory turnover, guys. No, receivable turnover is, I'm guessing, is how fast the company collecting cash from like stuff. Okay. Cost of goods sold and average inventory turnover. That makes more sense. Yeah. Okay. There's still some stuff. Payable turnover, which is cost of goods sold divided by average rate payables, and then payable. Payment period. payable. Payable itu, that means a company is buying stuff that the cash has been transferred by now, but the revenue is already been recognized. That's what I'm guessing. Cash conversion cycle. What the fuck? Average collection plus average inventory period minus payable payment. Average collection period, average inventory. So all of these three. Collection period, berarti kan the inventory is being converted, right? And average collection period, average inventory period, collection, average inventory, that makes sense. Inventory-nya, the inventory, collection period. What got you into streaming? I honestly just like to track my studying. It's not like because I want to stream or anything. It's like I want to track my streaming and my studying, because I feel like I'm such a mess. I'm studying and also I have like an exam in May, so I have to keep track and just keep studying. Like this streaming helped me to like, okay, how long has I been studying, and like, yeah, it's just a good thing to track your studying. Average collection period, inventory period. Okay, how about this? Can you make conversion cycle period I don't think streaming helped me focus, but it creates habits. Like if for me to focus on studying, it's a fucking coffee, bro. But to me to create that habit of just studying like every day, like right now I am on the 8th semester. I don't know what is it in like America or like other countries, but in Indonesia, like we're on the last semester, so the only thing that I care is like thesis and internship, which is I cannot internship, but because I have like an exam in May, basically. So it just create habits, because I have no classes. My thesis is basically done. I just need my teacher to like prove it. So yeah, it's just like it's a good time to do something rather than just play video game all day, you know. So yeah. Okay, think of a CCC as a time machine for your money. It measures how many days your cash is trapped in a business before it returns to your bank account. Perfect. Make this number as small as possible. Okay. Goes to shop. Yeah, waiting for check and supplier's grace. Inventory period, receivable period, payable period. Wait, purchase inventory, payment to supplier, sales to inventories, payment received. So it's like, yeah, like how from just a minute. So it's basic how fast from inventory. That looks way too fancy to be a coffee. Bro, this is just a glass, bro. Sorry. This is just a fucking plastic. This is a plastic with a coffee. That's it. This is a latte coffee. It's not that fancy. Because my camera is shit. So it looks kind of fancy, but it's just a fucking a plastic glass and a coffee. I buy it for like 27 IDR. 27 IDR $2. So it's like 27k IDR, not $27. So it's like 1.6 like USD. So it's quite cheap. But it's just a caffeine for me. Like it makes me focus. I think I have ADHD. I'm pretty sure. So like it does help me a lot. Yeah. Okay. So you are very close. What you just described is the total time from buying a product to finally having the cash in your hand. It is something called operating cycle. The cash converter cycle is one step more advanced. It is operating cycle minus the time your suppliers let you wait. Basically how fast from inventory to cash. This is what you think operating cycle. Average inventory period, average collection period. Average inventory period, average inventory, average collection. I'm sorry if I respond slow because my setup is ass basically. I respond like at least 2 minutes late. Average inventory operating cycle, average inventory paid, average collection paid. The cash conversion cycle is out of the pocket time. It's more important for analysis because it tells you how long your own cash is actually missing from your bank account. This is the grace period your supplier gives you to pay your inventory. If it takes 50 days to get cash from a sale, but you don't have to pay your suppliers for 30 days, you only need to find enough cash to cover those middle 20 days. Open cycle is operating efficiency. How fast do we move product and collect? Liquidity, how much of our own money is tied up to operation. Okay, learning about activity ratio. Activity ratios are these categories include several ratios and also refer to asset utilization or turnover. Okay. How well a firm uses various assets such as inventory and fixed assets. A lot of total asset turnover, revenue divided by average total asset. I'm guessing it's like asset to revenue, how fast it is. Yep. Fixed asset turnover, average is average net fixed asset. Fixed asset. Okay, so just like fixed asset with net fixed asset. Working capital turnover, revenue, leverage. What is this one? Is the mean amount of money a company has tied up its day-to-day operation of. Current asset and liability. Oh, working capital. Oh my. Oh. Okay. It's asset minus liability. Yeah, and then working capital and there is the working capital. Dude, my internet is so ass. Quick ratio, cash plus market. I've read this before, and I think in PowerPoint ketiga cash ratio, cash, marketable securities, current liabilities. Why is there 5 people watching? Okay. Defensive internal, cash plus marketable securities. Receivable, average daily expense. I don't get this one. Can you give me an example? Okay. Cash plus marketable securities. Receivable. Imagine a trading company with a does mutual fund publish short statement? Yes, oh, actually they do. Annual / semi-annual. Fund generally reports their holding to SEC quarterly 30 to 60 days. Numerical example right there. 5,000 cash plus 5,000 securities. Okay. What this means, for every $1 for the company owe in the next 12 months, it has 1.12, 1.25 in near cash. Oh, yeah, it's like how fast like can kayak what the company has to pay up its liability. Like quick ratios like so like receivable, marketable securities, so like yeah, investing, and cash, like how much cash it has, so like how fast it is, how fast can the company like pay off its liabilities. So quick, kalau cash you just mark cash and mark security. Quick is receivable because like nggak bisa juga nggak dapat langsung. Like defensive internal. What the fuck is this? Daily expense.
SNS の通知薄っぺらなつながりかいや画面の向こうにいる誰かを落とした瞬間に思い出すこの不思議な感覚元気かの人とそれだけで十分絆はデジタルを超えてレジを回していく Yeah Look around we ain't solo と愛の雑踏孤独なプロローグでもあいつのジョーク今も聞いてるぜローキーな夜に一人で吹いてるサクセスの定義人それぞれだけど笑い合える場所があるならそれでウィンだろ Time flies memory remains gold 語り尽くせない僕らのエピソード完璧じゃないからこそ愛しいぶつかり合って磨かれたダイヤモンド
Oh, bentar. There is liquidity ratio, makes sense. Quick ratio, cash ratio, current ratio, defensive internal, solvency ratio. Give the analysis information of the firm financial leverage and ability to meet its long-term obligation. So this is short-term liquidity, like how fast. Solvency is like like long, like as you can say long-term. Debt to equity, debt to capital ratio. Capital is debt plus equity. Asset makes sense. Why is capital is total equity? Long-term funds that have been invested into the business to buy an asset. Yeah. Okay, that's why an asset a company owns from the factory patent must be paid for. There are only two ways to get that money back: borrowing, that you take the loan, or issue the loan. This is a legal obligation to pay the loan. Asset. You might wonder why not just using asset. Analysts prefer the total capital of the denominator for a specific ratio for two reasons. Focus on interest rate as soon as possible. So it's a lot of ratio. Profitability ratio, which is gross profit, interest coverage ratio, earning before interest and taxes, interest payment, earning coverage, interest coverage ratio. So interest payment, I'm guessing this is, you want this as high as possible. Kalau semakin tinggi, like the higher it is, the better. Terus earningnya bakal lebih tinggi. Dan sebenarnya pengen earningnya oke, masih gede. I wanna hear some music in a minute. How do I? I wonder if
Like reflection on my window. Hopefully you won't see me. I put the face that has been worn out just today. This is not the first time. 115, the clock talks to me. I can't seem to make it stop. Oh my, tell me, should I just start to let you go, baby? Everywhere I go, memories within me still remain so strong, but I can't go on repeating melodies of the past to get by. Tell me what's this emptiness that keep holding me from moving on. Everywhere I go, all the voice surrounds me still on my window. Hopefully you won't see me. I put the face that has been worn out just today. 115, the clock talks to me. I can't seem to make it stop. All the noises echoed in my head. Everywhere I go, memories within me still remain so strong, but I can't go on repeating melodies of the past to get by. Tell me what's this emptiness that keep holding me from moving on. Everywhere I go, all the voice surrounds me still remain so loud, and I can't go on repeating melodies of praise. Surely, is it for me? Is it for you? Tell me. Oh, I have ever wanted was to see so free. Then how do you tell me?
try singing this song. songs. How well they describe. Oh, fuck it. Done. Okay. Interest coverage ratio is like, yeah, how well the interest is being covered by the company. Yeah, like the higher is the better, right? Like per interest payment per dollar misalnya can be like the earnings higher gitu kan. Per interest yeah, okay. Next is financial leverage ratio. Is equals average total asset divided by average total equity. Asset divided by equity. Fixed charge coverage. I don't get that. Next is profitability ratio. This makes sense. Gross profit divided by revenue. Karena revenue, cost of goods sold, gross profit. So, and then operating profit margin, operating profit slash EBIT. Okay. What is after gross profit? I'm guessing like depreciation and amortization. Yeah. And then net profit margin is net income divided by net income. Yeah, makes sense. Okay. Return on equity. Return on equity is a profitability ratio that measures how much a profit a company generates with the money shareholders have invested. The standard calculation for return on equity ended 0.2% in this year. Suggests that management is excellent at turning shareholder investment into profit. Indicate that the company is inefficient, that it has too much idle equity that it isn't being to productive use. The DuPont or among the retention. Next is financial ratio. Describe relationship among ratio and evaluate using ratio analysis. Example, relationship between ratios. An analyst calculate the following activity and liquidity ratio for a company over the last 30 years. Current ratio, quick ratio, days of inventory, days sales outstanding. Determine what the analyst should infer from this ratio taken together. As the current ratio gets higher, that means, but the quick ratio gets lower. Because the current ratio gets higher, but the quick ratio gets lower. That means the account receivable is high. Oh no, yeah, that's a better one. Current ratio is asset plus that one divided by revenue, and quick ratio is asset plus blah 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 plus account receivable divided by that is not good. while the quick ratio has decreased. This could result from inventories increasing or from current asset other than inventories decreasing. This increase in days of inventory on hand suggests increasing inventories explain the positive trend and the current quick ratio. The decrease in days outstanding indicates the company has been collecting cash from customers sooner than it has been in the past. Taken together, this ratio suggests that the company may be accelerating its collection to make up for the drained cash from poor inventory management. Yeah. Return on equity is equals net income and shares outstanding, which is net income and divided by sales slash revenue. I'm just revenue level. Revenue divided by asset, and then asset divided by equity. Kita per share ya, average outstanding equity ya. Average total equity. Equity ya, net margin setelah revenue divided by asset ya, and asset divided by equity. Key points substituting NPM to 3-part: tax burden, interest burden, and EBIT margin. What the fuck? An analyst has gathered data from two companies in the same industry, uses the extended analysis to ascertain critical factors that account. Company A return on equity of 30% and 24%. So EBIT divided by EBIT margin, EBIT divided by revenue, before interest and taxes. So company B is better, right? That means like the operation is better than company A because the EBIT margin is bigger than company A. And then total asset turnover equals revenue divided by average asset. So company A, just like how fast the assets become revenue, basically. So company B is better as well. Interest burden, so earning before interest divided by earning before interest and taxes. Earning before interest and taxes, earning before taxes. That means company B. I don't know about interest burden now. Earning before taxes, earning before interest and taxes. I'm gonna skip it. Financial leverage, average asset divided by average equity. But company A is much more efficient than company B. So company B has a better. Company B has a better has lower expenses basically. But company A is much more efficient. Tax burden, net income, divided by earning before taxes.
Amber liquid deep talk classy night お前との絆最高の light just reflect it's the soul base moves the heart 二人の物語 never apart years pass by we grew up wise お前の瞳に映る俺の rise old fashioned way keeping it true 感謝してるぜ my friend to you
正論僕のわがままぶつかり合って火花が散る午後分かり合えないと背を向けたけど心のどこかでお前の声を待ってる違いがあるからこそ惹かれ合う磁石のように反発しては引き寄せてパズルのピース形は違うけど隣れば一つの絵が見えてくる摩擦が生む僕らの熱量痛みの数だけ深く刻まりぶつかり合う不器用な愛の形一人じゃ知れない自分の限界葛藤の先に見つける真実人間関係の楽しさが心を磨いていく仲直りのきっかけいつもからなくてお前の差し出した安いお菓子一つ悪かったなって言葉はなくてもその空気感で全てが許される完璧な関係なんてどこにもない歪んでいるから僕ら
Net income per employee. Earnings per business. Sales per employee. Growth in same-store sales is used in the sales store. Wait, growth in same-store sales. Retail.
cloudy vibes puzzle incomplete 君との関係最高のフィット不規則なシェイプ
Average revenue per user. Something key gitu. Capital adequacy.
この絆を永遠にラス違いを楽しもうありのまま二人のストーリードラマチックなまま壁を壊して向き合う勇気その先にしかない光があるぶつかり合う不器用な愛の形一人じゃ知れない自分の限界葛藤の先に見つける真実人間関係の楽しさが心を磨いてく曇り空の向こうに青空が見える
Wait, okay, I've read all the material from okay. It's usually gonna okay.
Yeah, 少し増えたシワ大人びたスーツでも話し出せばあの頃の僕ら時間の壁を一瞬で飛び越えて記憶のアーカイブを二人で今癖になっていた空白の期間それさえも最愛のスパイスになるお前変わったなお前こそそんなやりとりが何より嬉しい止まっていた時計が動き出す重なり合う二つのタイムライン時を超えてつながる絵にしの強さ一人で歩むより確かな足跡最愛がもたらす新しいエネルギー人間関係の楽しさが命をつないでいく
Which of the following considered a primary limitation of financial ratio? Financial ratio is highly informative and conclusive even when viewed in isolation. Analyzing single panel is usually sufficient. Different accounting treatment can make comparison between companies difficult, let's step on them. Finding comparable industry ratio is simple when analyzing a large company that operates multiple industries. A retail company has an average collection period of 25 days, an average inventory period of 45 days, and average payable period of 30 days. What is the company cash conversion cycle? An analyst observed that the company current ratio has increased from 1.3 to 2.1 over 3 years, while its quick ratio has decreased from 1 to 0.6. Concurrently, the days of inventory had increased significantly and the days sales outstanding decreased. What does this combination of ratio most likely suggest? The company may be accelerating collection from customers to make up cash tied up in the slow-moving inventory. A company reports average total asset of $800,000. Average total equity is 25. What is the company financial leverage? Leverage exercise asset divided by equity. 800 by 25. For the fiscal year, a company reported earning before interest (EBIT) is $150,000. The company interest expense was $30,000. Earning before interest, and the company interest expense was $30,000, resulting in earning before tax of $120. What is the company interest burden ratio? From the DuPont analysis, 4/5, 0,8. When preparing common size financial statement, items on income statement are most often expressed as percentage of. When preparing common size financial statement in income statements, it's revenue. Which of the following metrics is an industrial specific ratio most commonly used in the retail industry to evaluate performance without effect of a newly opened location? Growth in same-store ratio. A company has 10,000 in cash, 5,000 in marketable securities, and 5,000 in receivable. If a company average daily expenditure are 500, oh fuck. Using the traditional three-step DuPont system, calculate the return on equity a company with a net profit margin of 8%, asset turnover of 1.5, and a financial leverage ratio of 2%. A company generates an operating income of $200,000. Its average total asset is 1.2 million, and its average total capital asset, this is total capital, return on invested capital. Nice. Let's go. 10 out of 10, baby. And I did it in quite fast time, so it's good. Okay. There's one more material for the financial statement. I'm gonna take a break. 15 minutes. But the next material is gonna be about let's see. The next material is gonna be about introduction to financial statement modeling. So this is there aren't that many materials, so I'm guessing, and this is gonna be, it's not that many material because it's introduction and stuff. So this is gonna be interesting. So there you go. Okay, see you in like 15 minutes, so hell yeah. Okay. Okay, let's study the next material, and it's gonna be Financial Statement Analysis 7B and Introduction to Financial Statement Modeling. I don't think I'm gonna. It's only like 9 slide. So okay. Sales-based pro forma company model. Step 1: estimate revenue growth and future revenue based on market growth and market share and trend growth.
Droplets sliding down the metallic frame 骨組みを伝う雨水の規則的な落下 It's not an intrusion, it's a silent rescue 不要な壁をシフトの中に溶かしただ差し出された持ち手の角度
What is this?
Alright, so now we can move on to the actual pro forma, well, the actual income statement. We'll go ahead and label that, expand this. So we're going to copy in our business. So we need to know, so we'll just label these product 1, product 2, and product 3, right? So we need to know the dollars collected per unit. We need to know the sales tax collected on each item, the revenue per unit or sales per unit. We also need to know the cost per unit, the gross profit per unit, and the gross margin percentage here. And an additional assumption that we're going to need to know is weekly growth rates, or depending on how we do this income statement, if we're going to do weekly or monthly, we'll just change this to actually monthly. We'll do monthly growth rates. All right. So here for our first product, dollars collected. Let's say that we sell this type of stock for $10, and we're actually going to format this real quick. So let's say we sell that first product for $10, the second for $12, and this one, let's say $15. All right, so let's just assume a 6% sales tax rate per item. A super simple mistake with sales tax is that you'll just take that 6% and times it by the $10 to get the 60-cent sales tax collected, right? But that would be incorrect. So actually what you need to do is for revenue per unit, you need to first calculate that. So revenue per unit would be the $10 divided by 1 plus the 6%, and you're going to want to lock this as well. And you go ahead and you get $9.43 of revenue per unit after taxes. So basically what you would do is you take the $10 minus the $9.43, minus the $9.43 to get 57 cents instead of 60 cents. Now that is the correct way of calculating the sales tax per unit. Super common mistake again, just make sure you're not taking the $10 times the 6% to get 60 cents, all right? And then what we can do is just drag these formulas across, since we locked that, and we can get the sales tax collected per product here. All right, so the next thing we need to assume is the cost per unit. All right, and let's just say we're making socks, so let's say it costs $2 to make this sock, $2.50 to make this sock, and another $2.50 to make that sock, all right? So here I'll highlight in yellow the assumptions that you need to know. The rest is kind of math, right? All right, so the gross profit per unit is simply the revenue minus the cost per unit. All right, so per pair of socks that we sell, our gross profit is $7.43. Go ahead, drag that across. All right, so then for our gross margin percentage, we basically just want to take the gross profit divided by the revenue per unit, and we'll drag this across, change this to a percentage, and that's our gross margin percentage. And these are pretty good margins, especially in like a retail business. You're not going to see these type of margins normally. All right, next
Yeah, that's almost impossible, bro.
Product. And to keep it simple, we're just going to keep it stagnant. It's not going to change month to month. We're just going to do a 1-year forecast, so 12 months, and it's going to have the same growth rate for each month. Let's just say we expect these socks to grow 10%. Product number 2 is going to grow 12% because we're marketing that a little bit more, and 6% for this one, let's say. So now we have our assumptions. Now we need to do a forecast of the amount of units that we're going to sell per product. So we'll go ahead and do product 1, product 2, and product 3. And then we're going to go ahead and put in the months here. So we'll say this will be for month 1, month 2, and all the way to month 12. All right, and then, so this is kind of all assumed. We need to just kind of predict for this first month how many socks we're going to sell, and then we'll use these growth rates to adjust this for the following months. All right, so for month one, we basically just need to determine we need to predict the units sold based off of month one. So for product one, let's say we sell 1,000 pairs of socks. For product two, let's say we sell 500, and we sell 0 for product three because we don't have it yet. But we're going to release product three in month three, and let's say that third month we predict to sell 700 pairs of socks for product three. All right, so now what we can do, now that we have our estimates, we can take these growth rates and just take the previous month and times that by the growth rate, and we'll go ahead and lock this as well. We'll do that real quick for both of these for some reason. All right, and for this last one. All right, so we can go ahead and drag these across. And here we'll get some nasty decimals, but we'll just kind of get rid of those. So here we have our predicted, and we're also going to make a totals
annual
over here. So let's do the sum function for all of these, and these are the amount of socks we will be selling, 42,677 pairs through our 3 different sock products throughout the year. All right, a lot of socks. All right, so now we can move on to the actual pro forma, the actual income statement. We'll go ahead and label that, expand this. So we're going to copy these again. We'll just copy them down here. All right, so if you're familiar with income statements, this will be pretty simple for you. And if you're not, just pay close attention, and hopefully you'll kind of learn how to actually create an income statement and learn how to read certain things, all right? So starting out, we have our revenues. For each product, we have our 3 products. Go ahead and paste that there. All right, so we have our revenues for each product, and basically what we're going to want to do for this, we're going to want to go ahead and take the predicted sales of 1,000, and we're just going to want to times that by the revenue per unit that we assumed above here. And we're going to want to go ahead and lock that as well. We'll get rid of the decimals here. And we're just going to want to do that for each of these products. So 500, and we're going to want to times that by this revenue, right? Go ahead and lock that again. And for this last product, we're going to want to go ahead and lock that again as well. All right. And so we'll go ahead and drag this across.
Oh my god, please fix that.
And make that a little bit nicer to read.
Okay.
All right, so as you can see, obviously we didn't sell any product 3, so no revenues for that product. And then we're going to go ahead and write a totals column for each month. And we'll just do the sum function of these and drag that across. And then we're going to want to do a sum function here. And there we go. All right. So here we have the revenues for our 3 products and the total revenues for the year of 468,000, close to $500,000. All right. So after revenues, what you're going to want to do is you're going to want to do cost of goods sold or COGS. For the 3 products again, I'm going to go ahead and paste that. And then for month 1, basically we do something similar to what we did up here. We take the cost per unit, and we're going to want to again lock this cell. And we're just going to want to times that by, again, the predicted units sold for that month, all right? And we're going to want to do that for each product, and then sum these again, all right? So just doing that real fast. All right, make sure you hit that subscribe button. It really helps me out. Smash that like button. And so then our gross profit margin is you take the gross profit and you divide it by the revenue. Right, so now revenues, and you get a percentage here, $1,000, right? Minus the cost of goods sold for the total of the 3 products, and we have a gross profit of almost $12,000, right? And so then our gross profit margin is you take the gross profit and you divide it by the revenues, and you get a percentage here. And we'll go ahead and drag these across and sum this up.
Sum?
This is our predicted gross profit for the year. Not do that, all right? Just selling stocks. All right, so now we get on to the more assumptive part of an income statement if you're doing a pro forma, and this is the expenses, right? So we need to know the operating expenses here. And these can come in tons of different ways. We're just going to cover a couple. That's not going to include all of operating expenses in a normal business. We're just going to list a few here to kind of get you guys a good idea of that. So we have marketing. We have the marketing expense. We have research and development. You know, we got to find out. We got labor. Let's say we also rent a building, so we have a rent expense here. And generally here, you would also include a depreciation expense. And this gets a little bit more complicated. All right, so depreciation gets a little bit tricky because you need to have information on your balance sheet, which we're not going to be covering in this video. So we're just going to leave depreciation blank for now. But hopefully in a future video, I'll do a pro forma balance sheet statement using the same income statement, and we'll be able to calculate depreciation. All right, so we'll just leave that here, but put that as 0. So let's say for our marketing, we're going to spend, let's say, $300 a month on marketing. And all of this is kind of assumptive, right? So you just kind of predict what you think this will be to your best estimate. Go ahead and put this in currency here. Or sorry, we have the rest in accounting. So we'll go ahead and put this in accounting format. And so research and development, let's say that's not a huge thing. So we're just going to spend like $30 a month, you know, testing new stocks and doing that. All right, so with labor here, we're just going to create a new worksheet real quick to kind of go through some simple math for to predict our labor. So a way we can do this, let's just say we pay our employees $15 an hour. And we have 2 employees running the store. They work Monday, let's just say Monday through Saturday. We'll be closed on Sundays. So they work 48 hours a week. We have more than 2 employees, but we only have 2 employees at a time. So 48 hours, so we'll do 48 hours times 2, 8 hours a day, just to keep this simple. So we'll do 15 times 96. So we're paying about $14.40 in salaries and wages or in labor expense per week. So we'll take that and time 1,000. So we're going to take 300. We're going to do 1 plus this total expenses. We'll just do off of our expenses $12 in order to get all these stocks sold for this EBIT. That's what that stands for. All right. So also very simple. You just take our previous gross profit and you subtract our total operating expenses to get our operating profit. So this is how much operations, after our operating expenses, how much money we're bringing in after we pay for all of our expenses, right? All right, so then after finding our operating profit, we're going to want to know our operating margin percentage as well. And that's just taking this, our operating profit, divided by the total revenue, which is here for month 1. And we can drag this across, get a percentage here. All right, so we're almost done. I know if you're sticking with me, I hope you're still here. Super important, but make sure you subscribe, hit that like button. Please do that for me. All right, so then we have our interest expense. We're almost done. The income tax expense, and then we will be able to find our net income, which is the goal here. All right, so for our interest expense, we're going to say that we're not going to mess with that right now because we need to kind of dive into the balance sheet. So when I talk about the balance sheet, the pro forma balance sheet in an upcoming video, we'll be able to kind of understand this a little bit more. But as an interest expense, for now, we're just going to say that is 0%. All right. Our income tax expense, let's just say, to keep it simple, we'll just say 30%. All right. All right. So for our interest expense, we're just going to go ahead, hit our operating profit, and multiply that by the interest expense. Obviously, we know it's going to be 0 because we just said 0%. All right. But we can do the sum formula across here for the year. And so this is just the total column for the year. All right, so for our income tax expense, we just want to take our operating profit and we want to times that by the 30%. Make sure, again, to lock this, super important. All right, and then we're going to drag this across, go ahead, get rid of those decimals, and get another sum here. All right, so now we calculate what we want, right? Our net income. So basically, that's just taking our operating profit, you subtract interest expense, and you subtract the income tax expense. And that gets you our net income. And we'll go ahead and do that, do a sum function, and voila. After all of our expenses, we will make around $200,000 as a business in net income selling stocks. Voila.
Predictive.
Right, so this is hopefully a detailed enough overview of how to make a pro forma income statement. Hopefully this is helpful, kind of gets you to understand what revenues, cost of goods sold, how to calculate profit.
The big one is like the assumption here, like the marketing 5%, like changes over time. Like this is assuming it is constant, which probably not, right? Labor as well. Someone's gonna leave and stuff like that. So yeah, it's a really. So basically, pro forma sales based pro forma company model. I'm good at this. Have I fucking okay? Okay. You will need to identify how human psychology skew analysis forecast. Yeah. We'll test your understanding of chronological sequence used to build sales-based model. You need to know the forecasting always begins with estimating revenue, top line, which then derive the subsequent estimate cost of goods sold, operating expense, SG&A, and working capital account. Interesting. Next is Porter 5 forces, a framework analysis commonly used to evaluate a company's competitive position. Companies have more pricing power when the threat of substitute fruit is low and switching to costs are high. Companies have more pricing power when the intensity of the research variable is low. Industry developments to be expensive. Where the fuck? This is revenue, cost of goods sold, gross profit, expenses, operating profit, or EBIT. For 2002, the input cost will increase by $5 per unit. Calculate the gross margin and operating margin. Alfredo.
ワイ不器用な施設をグルーヴに変え Floating in the grace of the shared space
Okay. In 2002, given an increase in unit price by 5% and no change in units sold. So, oh, 105, I'm guessing, yeah. So 5% in gross margin. The entire increase in input cost is passed on to consumer to a equal increase in price. The number in units sold is not affected. So the gross margin is 27% and 60% and 30%. Given an increase input price by 5%, the percent 105. Oh, cost of goods also. Oh, okay. I know this. Cost of goods sold is also increase. Increase in unit price. Yeah. Percent, it would go down. Sales and costs are subject to inflation or deflation. Given an increase in price by 5% and decrease of 50 units in sold. Ini 50 15. Oh, ini saya okay. Interesting. Choice of an explicit forecast forecasting. Highly cyclical company present difficulty in choosing a forecast horizon. The horizon should be long enough to affect the current phase of the driver that are driven on the trend or bloated. In fact, normalized earning are expected to cycle earning or alternative expected earnings when the current temporary effects on event or cyclical are no longer available. So ini kayak saham atau perusahaan komoditas yang susah buat di forecast. Such as acquisition, merger, and disruption should be considered temporary. The forecast horizon should be long enough that the perceived benefit of such event can be realized. For earning projection beyond the short term, one method of forecasting future financial results is to assume the trend growth rate of revenue over the previous cycle will continue. The difficult part of the analysis job is recognizing inflection point, an instance when the future will not likely be the past. Example of inflection point include change in economic environment or business cycle stage, government regulation or technology. Oke. Materinya enggak banyak. Next, kita latihan soalnya.
Cruising through the grace of the city morning. The traffic light changes, but the feeling stays. 明日という速度を一度だけ落として Floating in the echo of a small kindness 無垢なつながりに背中を預ける
Okay, when building sales-based pro forma model, which of the following tasks should an analyst typically perform? First, expenses growth and future revenue based on the market growth and market share. What should we see? Karena income set ini selalu dari atas. Satu. An equity analyst received newly released worse than expected macroeconomic data but only makes minor small downward adjustment to her previous earnings. B, consider apa sih anchoring to apa sih previous information zone. If I'm not anchoring bias, illusion of control. Apa ini? Ini berkonten bias ya. An analyst fixated heavily on firm-specific management team and animal factors that ignoring the historical failure rate of a company within a specific industry. Base rate confirmation bias. Ketiga. To best mitigate confirmation bias when evaluating company prospect, an analyst should, with a complex seek out points of view colleagues who have opposite view or knowledge judgment. Narrow the confidence interval for their financial forecast. Definitely not. Seek out the point of view of colleagues. So yeah, for B. According to Porter 5 Force Framework. Okay, I can turn my camera on again. According to Porter 5 Forces Framework, a company is likely to face more intense industry rivalry and have less pricing power. Face more intense industry rivalry and have less pricing power when the industry has fixed costs, has a high fixed cost and a high exit barrier. I don't know about exit barrier. It's highly concentrated with few competitors. The growth is very rapid. I see, B makes more sense. I feel like A and B doesn't make any sense, no? Okay. A company's prospect for earning growth will most likely decrease if the threat of a new entrants into industry is low. A threat of new entrants biasanya. Switching costs for its customer are very high. Bargain power of its supplier is high. Switching costs. What? What's switching costs?
Resting in the shade of the park canopy. The light is filtered, the air is cool. Drifting in the green sea of the urban oasis. Yeah. 誰かが植えたちこの数十年の重みで葉を広げてデートもされる無償のスーズ Share the oxygen of the old guardians 動かないままで享受する放題な余白意味を持たない緑のさざめきに同調する Yeah, empty bench waiting for the next one でラペン昨日ハゲた国際の素朴な手触り It's not a gift, it's a fundamental grace 不評な理屈を土の中へ返しただそこに座れる揺る事実を噛みしめる Resting in the shade of the park canopy 公園の木陰で意識を緩め The light is filtered, the air is cool 不器用な直射をメロディに変え Drifting in the green sea of the urban oasis Distant sound of children playing in the sand 砂場で響く無邪気な笑い声の破片 Is there a peace in the midday
Not too fucking math. 2000 dikali 104. $4 so apa namanya, gross profit sama dengan 50 ribu. And then, so ini number of operating margin. Oh, expense juga kurang 10.000. This is expense apa namanya, SG&A expenses. Jadi 50.000 jawabannya baik sudah kita aman. 50 bagi 10,48 ya. Oke. Referencing the same base that Alfredo Inc. sold. What is the projection gross margin? Gross margin for gross margin. Selling price. Berapa ratus dikali 9 operating. Sold KGS 20 kali 5%, so 20 dikali 1,2%. Nah ini dikali 300 COGS 3670. So apa namanya, gross profitnya dikurang 570 and then apa namanya, expense 10.000 ya 10.000 47.780 dikurang 10 mau ditambah 10.000 akan dibagi 9.400 50%. Enggak, ini mah gross, itu mah operating margin. Ini mah gross margin 57.70 dibagi 9.461%. Oke. When choosing an explicit forecast horizon for a highly cyclical company, an analyst should most appropriately ensure that the horizon is long enough so that above trend or below trend earnings effects are not driven. Exactly. Okay, yeah. This 9 is C. In financial modeling, an instant where the future will significantly diverge from the inflection point. Okay. I'm gonna get like 5 out of 10. Okay, 1 C. 2 salah kan? 2 ya. I guess ya. 3A, 4B, 5A, 6C, 7B, 8A. Oh, okay. Basically correct, but yeah. But 4, okay. 9, 10, ya. 6 dari 10. It's not good. Gue juga kurang belajar, kayak kurang master material sih. I think that's it. Yeah. Okay, that is it. That is financial statement. I've read 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 PowerPoint in the past 7 days past 8 days, because yesterday I did not, on Saturday I did not study because stuff, so yeah. Then that's it. Okay. There is another investment that I need to do. It's derivative investment. I did alternative investment, and that is already equity investment, corporate issue, and that's it. Yeah, I'm gonna go with smaller material because I've read a lot. So alternative investment it is. Feature for that's like a private capital real estate. Last one is net. Oh wait, it's already break. It doesn't matter. It's basically done. Okay. Natural resources, hedge fund, and digital asset. Okay. I think that is it for today's stream. I don't think I'm not gonna study again. I'm gonna take a break. Maybe I wanna do something else, like other that I wanna do, like yeah. I think that's it. Ya, ini itu aja untuk stream kali ini. Gua udah, it's been 3 hours. Gua stream udah jam berapa sih? Jam 1 ya. Masuk jam sekali. Mau salat asyar juga. So okay, dari for the stream. Besok bakal stream lagi as usual, the study material. Habis study material gue pengen exercise, kayak gue levelnya sejauh apa lah, gue sejago apa ngerjain ujian siapa. After that gue nge-review, abis